Records were broken today. The Russell crossed 2,900 for the first time in history. The S&P 500 and Nasdaq closed at fresh highs, and Micron joined the trillion-dollar market cap club. Underneath, the picture got harder. The Dow lagged. AutoZone got hammered on earnings. Consumer sentiment last week printed at an all-time low. And the U.S. conducted defensive strikes inside Iran overnight. The same day the president said negotiations were proceeding nicely. Here's what happened today. The S&P 500 gained 46 points, up 0.61%, to close at 7,519. A record. The Nasdaq added 313 points, up 1.19%, ending at 26,656. Also a record. And the Russell 2000 jumped 1.77%, crossing 2,900 for the first time ever. But the Dow went the other way. Down 118 points, off 0.23%, ending at 50,462. So 3 of the 4 major indexes closed at records on the first day, back from Memorial Day. The Dow alone lagged. The driver was the Iran-Hormuz peace deal trade. And it was messy. Over the long weekend, the president said a deal with Iran was, in his words, largely negotiated. By Monday, he was saying talks were proceeding nicely, but with a caveat: a great and meaningful deal or no deal at all. Then, overnight, U.S. Central Command conducted what it called defensive strikes on Iranian missile sites, drones, and boats it said were laying mines near the Strait of Hormuz. Iran called it a clear violation of the ceasefire. Oil split. Brent rose about 3% to just under $100 a barrel. WTI fell about 3% to just under 94. The split is the story. Brent is pricing in a new wrinkle. Iran's foreign ministry said today that navigation through the strait will, quote, have costs. They want a permanent toll on every ship that passes. That fee would lift global oil prices even after a deal lands. WTI didn't trade Monday because of the holiday, so today's drop is catching up to the weekend deal optimism rather than reacting to the strikes. The president's cabinet was scheduled to meet at Camp David tomorrow. After the close today, that meeting was relocated to the White House. The official reason was weather. Same cabinet, same agenda. Iran is at the top of it. Underneath the index moves, the biggest single name story of the day was Micron. The stock jumped 19% and crossed $1 trillion in market cap for the first time. The catalyst was a UBS upgrade. The price target went from $535 to $1,625. That's the most aggressive single-name revision in recent semiconductor coverage. The thesis: Micron's high-bandwidth memory capacity for next year is already sold out. Long-term supply agreements are locking in pricing, and the structural shift to AI memory means Micron should trade closer to NVIDIA's multiple than to a traditional memory chip makers. The president also shouted Micron out at a Friday rally. The broader semiconductor complex went with it. The VanEck Semiconductor ETF gained 3% to a new 52-week high. On Semi, Western Digital and AMD all rallied alongside. But for every Micron, there was an AutoZone. The auto parts retailer beat on earnings, missed on revenue, and the stock fell 10%. The pattern is becoming familiar. Buybacks can boost earnings per share. They can't substitute for top-line growth. The market is starting to ask for both. And that's the disconnect that defined today. Records on the AI side. Pain on the consumer side. The Conference Board's consumer confidence reading came in at 93.1, slightly above the 92 consensus, but down again from April. 2/3 of consumers told the Conference Board they're cutting back on spending. And last Friday, the University of Michigan's final consumer sentiment number printed at 44.8, an all-time low, third straight monthly decline, with 57% of respondents citing gas prices as the main pressure on their finances. So the record print isn't the whole story. The record print is the AI half of the index. The consumer half of the economy is at a record low. Tomorrow, the cabinet meets at the White House. Iran will dominate. The president will either come out with a deal or come out with a threat. The path forward for oil, the consumer, and the records all run through whichever direction that turns. That's the gap to watch. Records are real. What's holding them up is increasingly narrow, and what's underneath them is increasingly stretched. We cover the markets on the days that actually matter, with explainers when it helps. Hit subscribe so you don't miss it. We'll see you next time.